Good morning, guys. This is Kenzo Xtrahot Forex. So let's go straight to our daily analysis, guys. So this is the first Friday of the month. So we see the market is still going up and down. So we're expecting NFP today. So we're going to see what's really happening. So the best thing that you can do is make sure you understand what's really happening with fundamentals. If not, just stay out of the market around that time, around 3:30, because the market will be going crazy, right? So without wasting your time, guys, please smash that subscribe button, like, share with your friends. If you want to be in the team, it's still $150. You pay once, then you're going to learn so much stuff about forex trading, the strategies, the trading psychology. And if you just want only the signals, it's only $20 per month, right? Simple as that. So now get funded with Traders Central to kickstart your trading career and make the profit that you deserve, and you will get access to TradingView, my FX book, and many more, and enjoy Traders Central ecosystem and so much more on their marketplace. Link in my description. Check the link, then you will start to enjoy more of the funding. Thanks. Let me reduce this. Now we are on US oil. I think this is quite simple. It's straightforward. We know what's really happening. That's why we see the market doing something like this. So what's really happening at the moment? This is crazy on a very bullish momentum, and we saw the market breaking this resistance here, and now the market is giving us what? That rejection that I was looking for. So from that rejection, guys, it's where I can say now is going to be a very nice time for people who actually trade oil to buy around this area, because I still think it's going to push to the upside. Remember, when the market pushes to the upside, it doesn't mean we want to see this some sort of rejections. You should be aware of this, and when you see this sort of rejections, that doesn't mean maybe the market is changing the direction, maybe it's going to the lower side. No, the market is just breathing. You run, you breathe, you run, you breathe, you run, you breathe. Simple as that, right? So at the moment, what we see is we see that around this area we have a support area. So what you can do is just have a very nice buy pending orders around this area. You can say maybe your stop loss should be here, maybe your take profit should be around that level. Why? Because I think the market might reach that level very quickly. The market might reach this level very quickly. I think after this analysis, I will just send a signal for this US oil, because it's just straightforward. I think it's quite easy why the market is still bullish, and while the market is still the oil is still on demand like this, we're still going to see the market push into the upside. Simple as that. So without wasting your time, let's move to the next one, which is US30. Let's go US30. So at the moment we are on US30. This is for our time frame. So what do we see on US30, guys? We see that the market, let me just remove this so that you understand exactly what I'm trying to show you. What's really happening here is the market is still under bearish. I'm talking about this area. The market was still under the bearish momentum. Then after, we see the market broken out of this area. Then from there, it means, or it shows that the market is changing the direction, or is changing the way it was moving before. Which direction we were talking about is we were going down, and this was a downtrend. Right? So the market was going down, and it means the market was like seriously selling off, right? So after this breakout, guys, we see the market going sideways, or this, it's called like ranging market. It means the market is still deciding, because if we draw something like a resistance here, it's still going to make sense. Even if we draw something like a support area here, that is going to make sense, which means now the market is not actually, we're not supposed to be in the market at the moment. We just have to wait for the market to give us a nice direction which we can follow, right? We need a direction which we can follow, and from following that is going to be easy for us if maybe we need to continue selling or buying. At the moment, the market is still deciding. Yes, we can still buy around this area because the market is still deciding. But actually, when the market is doing something like this, we're not supposed to be in the market because the market is just going sideways. Then after this, it's where we're going to see the market breaking out, maybe going to the upside, breaking this resistance, or maybe breaking this support and going to the lower side. So the best thing that we can do is we just need to wait for now. Let's wait for the market to reach this support area and see if it's going to be broken, or wait for the market to reach this support resistant area and see if that is going to be broken. If you find this information very useful, guys, please smash that subscribe button. So again, we see that the market is actually under pressure. Everyone knows that. So this causes the market to be like to do something like this because there's so much stuff that is going on in the market, right? So don't just expect the market to push to the sky or to go to the moon like easily. The market is still under pressure. Russian and Ukraine thing, it's also having a very like big impact on the market. So we should also think about that, right? So, and also inflation is something that is now pushing to the upside. So remember, this month is that time where we're going to have Fed interest rates, and that is also something that is going to weigh on the market. So we're going to see what is going to happen. Maybe the market might push to the lower side, but mostly when they add interest rates, we're going to see like indices pushing to the lower side, right? But we just need to wait and see what's really happening around that time, because at the moment we can't just estimate something which is going to happen like in 3 weeks, you see. So I think maybe you understand that. At the moment, the market is still just going sideways. We can't say the market is selling or it's buying. The market is just moving in sideways, something like that. So after when the market breaks out of this, it's where we can say now maybe we can say something. But at the moment, we can't just say the market is going to sell or it's going to buy. We can see that the market is not really pushing up. Why? Because there's pressure, obviously. But you also have to understand that whatever that is happening at the moment, it's weighing the market badly. Actually, it's not really positive. What we see is not really good with the market. So we should understand that before we do anything, right? So what we see is now we are on NASDAQ 100. I think I should just clear this. Let me delete this for you so that you can see nicely what's really happening before we even draw these things, right? So we can see from a bigger picture, this is a 4-hour time frame. This speaker is always irritating, man. Every time when it turns off, it has to make a sound. So, okay. Now, let's look at this nicely. From the top here, we can surely see that we are on a very, I can say strong or a very nice bearish momentum, because it's simple to identify, you see. It's a way too simple to identify. So because when we do something like this, you can see that the market is still like seriously pushing to the lowest, pushing to the lowest side. So what's really happening here is, I think the market is trying to play with us here, especially on NASDAQ. I think the market will try to act like maybe it's trying to recover. Then we might see another strong sell-off. I think that might happen. Or if we don't see that strong sell-off, I think we might see the market going a bit slowly. Because if we try to draw the trend line, let's try to draw and just connect the biggest or the strongest trend line that we can see. The best thing that you can do, if you don't really understand how to draw this thing, you can start from the recent one. I see this area. You see this area. I also see this one, this area, this area, this area, and this area. So we need to connect those areas. right? So let's start with this area and see if maybe we can able to connect maybe several points. Let's see, this one, yes, makes sense, makes sense. You can see that now we have 3 points. It's 1, it's 2, it's 3. So let's push if maybe we can have another point, because already this shows that it does make sense, right? Let's push to the next one. Even this one makes sense. So if we push the last one here, we can see that we have like many, or maybe let's say multiple highest points that we missed. So it means let's go a little bit down and see. You see, because even around this area it's a point also. So but the best thing that I can do, I will just stop here. You can see, if I stop here, I can able to say I connected with several points. I think I connected with let's see, I think it's 1, 2, 3, 4, which makes this very, very strong bearish momentum. So what I do actually with my strategy, I do double lines. Why? So that mostly I don't want to have those fake breakouts, because they happen a lot, and sometimes we lose from there, from those fake breakouts. So I will just do a wall like this. Why? Because the market usually doesn't really respect only your single line, but the market might have create some maybe different of 5 pips, 10 pips, of let's say 10 ticks or whatever. Then that doesn't mean the market is breaking the area, you see. But you can see even here, look what happened here. It means if you used only one line, maybe you were going to jump on that, and once you buy here, the market is starting to go against you, which is something that we don't want, right? We don't really need those fake breakouts. So from these double lines, what I'm going to do is I'm just going to have something like this dotted line to show, to make this thing to be like very nice, or maybe clear, way too clear, so that you can understand what's really happening. So at the moment, yesterday I did send a sell signal to my student, but this thing here, you can see this type of a move here. I think it took some of my student out if they did not adjust the stop loss. But the bigger picture, what I was seeing, I was exactly seeing that the market is actually on bearish. But the thing is, I can't just give my student some crazy stop loss, so they just have to do that themselves. You can see around this area that you can see that that area was a sort of a resistant. But those things, they happen like almost everywhere if we try to draw the lines like that. Sorry. So what's going to happen is, I'm thinking that the market is going to have something like this. Actually, if you entered somewhere here, the stop loss should be here. Why? Because I think the market is going to come back and touch this area here. I think the market is still going to come around this level. Way too possible, way too possible. But don't just say, just because Kenzo said that, and say maybe you can hold your trades up to here. Even if maybe as long as you made enough profit, you can even still get out from this area, because maybe this area might start to be like a support area, and once the market touches there, only 2 candlesticks, the market will just bounce back very quickly. The market might bounce back very quickly, and you end up losing if you don't really see what's really happening. But if you're using a bit smaller time frame, you might think that, okay, Kenzo, maybe you were seeing something like this. Let me remove this. You were seeing something like this, because small time frames, they will make you see things which are not really there. Maybe you were seeing something like this. I also saw that, but on a bit smaller time frame. Do you see that? I seen something like this. So with this type of if you are on a bigger time frame, you will understand, but on a bit smaller time frame, you will think, oh, maybe now we starting to go to something like a bullish momentum, something like that. Why? Because we have this type of a move. I also saw something like that. You see that? So you might think that, oh, the market maybe will create something like that. But when you go like little bit step back, 2 steps back, you see that no, man, this thing Actually, it's on the resisted area. The market used to do those things when it's coming here. You can see the market when it's trying to come, or maybe to touch the resistance, it will create a move like a bullish momentum, but keep pushing lower. When we draw this resistance, it's going to make sense. I hope you see that. So this area, I think, is just there just to, the market just pushed up just to touch this resistance. Now we expect the market to push to the lower side. Simple as that. So if you want to learn all these skills, guys, it seems simple to draw these things very quick, but it's years of learning, guys. It's years of learning since 2017, learning these things and learning the craft. It doesn't mean that maybe you won't get things wrong, but it's much better when you understand, like you seriously understand what's really happening. So what I'm thinking is, I'm thinking that maybe the market might still push a little bit low, higher, but we might still see the market pushing to the upside. So to say maybe we want to buy, actually we can say, let's wait for the market to reach this area. And if it gives us that, if it gives us that chance of, say, maybe a few candlesticks, bullish momentum candlesticks, it's where we can do it. It's where we can say maybe we can buy. But the perfect one that we can say we can buy, it's when the market breaks out of this resistance, and it's where we can say, you know what, the market is no longer under that bearish. Why? We can see that from January, the market was still selling from this area. We can see that, oh, if the market is going to get out of this fence here, or this wall, it means now the market is out of that resistance. And that is going to show us that, you know what, the market is actually out of the bearish momentum, or maybe, yes, bearish momentum or downtrend. Now it's time to do what? It's time to buy. Yes, the market can do something like this. Something like this. Let me show you. Because most of the time, you will see something like this. And from something like that, obviously, you're going to say, oh, the market is now changing the direction to the bullish side, because here it was very, very, like seriously downtrend. Then the market pushed to the upside. So you will say, oh, maybe the market is now buying. Yes, the market was buying, but we are still on that bearish momentum. You can see that here it's a breakout. So that shows you that, you know what, these actually are the counter trend line. Those resistant lines that we draw under this bearish resistance also, it means they are not really strong, they are not really big. There is a bigger one which the market is respecting out there. This one, they still fall under this one, they still respect that. So it means the market can do something like this, but still the market is still respecting the outer one, right? So it's easy for the market to break this one here, it's easy for the market to break this one here, but it's not easy for the market to break this area here. I hope you understand that, guys. Please don't forget to smash that subscribe button, like, share with your friends. I don't want to make this video very long. I hope you understood, and yeah, thank you very much. This is Kenzo, Xtrahot Forex. Bye.